Okay, so those are some strategies from Sachidanand. We'll get an Amar Singh in a moment from now. Dharmesh Kant of IndiaNivesh with us on the show as well. Dharmesh, good having you. Thanks for joining in. What would your call be, Dharmesh, on 2 or 3 of these banking names which have gone down today? RBL Bank, Yes Bank, and an IndusInd Bank. What do you do here?
Yeah, good afternoon, Neeraj. See, I don't know what the rumors are doing the rounds, but what I understand as far as Yes Bank is concerned, there was some technical glitch in the system, and because of that, few accounts were unable to withdraw, do a transaction, and that is the reason why this kind of a crash was seen in the counters. And RBL Bank, I think management came on some media channel and they have clarified the stand, so the stock has recovered post that. But the fact remains that they have exposure to certain accounts, and they are not coming up clean. Every time, every couple of months there is some account or the other comes up and the credit cost goes up, and then the NPA kind of a thing starts looming over them again. So unless the clear clarity on the asset quality which is there, and what is the impending problem in the assets which may emerge, if they don't come clean, this type of things will keep on happening. So I mean, at $30, Yes Bank is almost like zero kind of a valuation which they have reached, and now this India's housing finance thing is doing the round. But I would sincerely suggest to avoid these counters, not to jump, not to have any exposure in any of these banks. Even IndusInd Bank, maybe because of interbank deposits and interbank transactions happening, it may fall into a trap because of trouble by others which are there in the system. So a lot more pain to go. If you remember, a couple of months back we spoke about the same banks, and we said that, I said that asset quality still remains very murkier, and things are coming out the same way, so avoid them.
Right. Gentlemen, just stay on. In fact, interestingly, on this very same topic with regards to how exposure to real estate could be credit negative for some of the banks, and the increasing liquidity stress amongst real estate players, and the impact on Indian banks that have exposure to it. Let's listen into that conversation that we had with Moody's Alka Anbarasu Shefali from our research team conducted the interview with her. Listen in.
We do see that commercial real estate or direct and indirect exposure of banks to real estate sector is meaningful, at least for some of our rated banks. So if the situation in the real estate developer segment continues to remain sluggish, i.e. the liquidity conditions translate into solvency concerns for some of those developers, we would see asset quality pressures for some of our rated institutions.
Ma'am, in the report you've spoken about Altico, DHFL, but in last just 2 weeks or so, we've seen a PMC bank issue erupt in India. That's a cooperative bank, of course. And then there is also, yesterday, or rather last week, Lakshmi Vilas Bank was put out under the PCA framework, which obviously has an impact on the India Bulls group, because they've been trying for a banking license via merger route. With all this happening, do you think that there is a contagion risk out there, especially for the banks and the non-banks focused on developer lending?
Yes, indeed. So what started as liquidity issues in the sector, primarily for the NBFCs and HFCs after the default of IndiaNivesh, we think that situation has now transpired into solvency or credit concerns for some of those companies. So names that you highlighted, they were facing tight liquidity, but now the situation has worsened into insolvency concerns. So indeed, there is a broader sector-wide implication if the real estate sector continues to underperform, and the fact that the developers are unable to meet their obligations, because the first order impact is obviously the direct exposure of the credit providers, but the second order impact could be even on the mortgage exposures of banks and non-banks to end borrowers who have bought projects stuck with developers who are unable to complete those projects.
Okay. Ma'am, let's try and segregate between banks and NBFC. Where does the biggest risk lie? Some of the NBFCs, of course, have direct exposure, but even some of the banks like Yes Bank, IndusInd Bank, they have considerable exposure directly or indirectly, even some of the PSU banks as well, to this particular space. So what is your thought process on the same?
So within the two segments of the financial service providers, when it comes to NBFCs or HFCs, we think the issues are confined to certain companies who have concentrated exposures to developers. When it comes to the banks, some banks have larger exposure to commercial real estate sector. But at the same time, I think for the overall sector-wide, we need to understand that not all of the commercial real estate is just developer financing. Some of the commercial real estate is also lease rent discounting, and some of those could also be the projects that are performing fine. So the issue are confined to projects that are where developers are unable to complete them, and these issues are quite widespread, i.e. they are not really concentrated in one or the other lender. Impact will need to depend on which developer faces those liquidity conditions.
Okay, ma'am, with all that is happening, some people are calling it India's Lehman moment. Would you also term it like that?
Yeah, I'm not sure if it is of that order of India's Lehman moment. Perhaps the concerns, we think that at least the concern in the shadow banking sector, which is NBFCs and HFCs, have confined to a few names. We think many of those companies are now able to access funding from the markets. So in that regard, we think the issues are confined to a few names. And when it comes to even the developers, real estate developers, perhaps the issues are concentrated for a few names who will face more credit concerns and asset quality issues. But at the same time, we don't think it's an entire banking system-wide issue at the moment.
Okay. One last question. To fix the problems right now, what according to you should be done? Government recently announced that it would create an investment fund to provide soft loans to residential real estate developers, but that's not enough, of course, to fix the entire sector. So what more according to you can be done to provide a boost?
So indeed, I think at this we are not in a position to give any policy guidance or suggestions. Having said that, I think what we can look at are our banks that we rate. And in this context where credit concerns are rising again, we think banks that are more prudently run and build up loan loss buffers against unexpected risks will probably see better outcomes. On the other hand, the banks that have overexposed themselves can see further deterioration in their credit profiles.
Well, that's banks, and wonder what will happen with them. Well, but there is a bunch of companies on the other side which are not doing all that poorly as well, though banks continue to slide lower, financials continue to slide lower, and today some of the telecom names have also slid. So Vodafone Idea, for example, is down about 13 or 14%. Just goes to show betting on these numbers becomes a very, very risky idea. Dharmesh, the other set of stocks which have corrected thick and fast today are Zee and Dish TV. Now, what happens here? I mean, what should an investor do? Because yes, these assets might be great money generating assets and the business might be good. The stock price is clearly getting spooked for a lot of other factors.
Yeah. See, as far as Zee Entertainment is concerned, investors should stay put. They should keep on holding it. I think it's a matter of time that entire issue with the promoter pledging the shares and getting out of repaying the debt is resolved. Business per se, there is no problem on that front. Dish TV, there was no business at all. Right from the beginning, I never saw that as a good, promising business model. And now it's already on its way out. So Dish TV one has to exit. Zee Limited one can still hold, but it may take its own sweet time, and you can have a slide of 10-15% more on the stock price. So one has to be prepared with that. But the idea is to stay put there.
All right. Stay on, gentlemen. Lots more to talk to you about, and these are some of the beaten down names. But one stock that's managed to buck the trend in trade today is NMDC. The straight-run miner is gaining after the Ministry of Mines amended a word in its rules. Nikki Mirchandani is here to tell us what has changed and its implications. Nikki. clear the words have changed, and the notification in itself has amended the ministry's rule out there, which says that Mine Ministry notification amends the word may and put shall in one of the rules. Now the rule was MMRDA rule number 3 and a sub rule 2, which suggested that the state government may renew the lease, which happened. Karnataka government interpreted this word may and decided not to extend mining lease of Donimalai to NMDC. Now with this latest notification, the Karnataka government will have no other option but to go ahead and renew the lease for Donimalai and for NMDC as a whole. This comes as a great positive for NMDC, given that Donimalai mine contributes to around 70% of the overall output that we saw in 2018-19. And besides that, it also gives us a hope of future mining renewal coming in for Chhattisgarh, where most of the mines are due for renewal in March 2020 to 22 period. So this favorable development can also lead to an upgrade, a rating upgrade for the counter, given that slew of brokerages like that of Citi in the recent part went ahead and downgraded the counter, saying that these kind of uncertainty relating to the approvals were a major overhang. They have put in actually a number to the current market price, where they say that lack of Donimalai would dent the current target price to an extent of ₹20 per share. And just in case if this scenario is reversed, then the benefit would be to an extent of 20 per share. On the brokerage note, MK Securities suggested that this notification overall is a great positive, and even as central government and the state government continue to negotiate on the renewal of the mining lease, but then this action clearly sends out the message that the renewal of any government company's mine in the future will not be in any kind of problem by any of the action of state government. Overall, if you look at the Bloomberg consensus rating, 9 out of 19 analysts have a buy rating and suggest a potential upside of nearly 20% for this counter.
Right, Nikki, thanks very much for that. So that's NMDC, which is in focus. Now the ambiguity on the Donimalai mines and the lease agreement there with the Karnataka government is put to rest. So that probably has led to the fillip in the stock. It's up about 8% and good volumes as well. Closer to 20 million shares have already been traded. Amar Singh of Angel Broking is joining us on the show this afternoon. Amar, thanks very much for taking out the time. Starting off first, actually, before we actually get into your nifty calls, let's talk about individual stocks. What are you recommending this afternoon?
I would say that given the trend of the market, the market has corrected, and we are seeing some pullback right now, but that could also be short covering. So I have two sell calls. One is in Tata Motors. What we are seeing in Tata Motors is that it did consolidate and managed to rise towards 135 odd levels, but then it has been giving away its gains slowly, and it's almost retracing its lows which it had made recently. So any pullback in Tata Motors can be used as a shorting opportunity. So October futures around 118, 119 levels can be a good opportunity to short, with a stop loss of 123 and a target of 109 on the short side. As far as the other stock is concerned, that's from the pharma space, and that is Aurobindo Pharma. What we are seeing here is that technically, if you look at it, the long-term charts clearly show that upside will meet with selling pressure, and also there would be profit booking the moment the stock rallies. And what we've seen for the last few trading sessions is that the stock has been correcting and unable to sustain above the 620 mark, because that was a level of resistance. So this is one stock one can look at. So any pullback towards 581, 585 levels in the October futures can be used as a shorting opportunity, with a stop loss of 598 and a target of 553 in the short term.
Dharmesh, do you track NMDC? What's the take now? Is it more positive post this clarification and this change that has been put out?
Yeah, definitely. I mean, now there is a clear visibility that May and Shell has done the trick for NMDC. So there would be continuity of, supply to it, and they would be mining and extracting it and selling it. So earnings visibility is there, and if prices pick up on global recovery, so it can be around 140, 145 is what the target price we are expecting for NMDC based on FY21 numbers. So that also includes the steel plant getting commissioned. So we have built in that SOTP based kind of a valuation model for that. But this was definitely, it came in between from nowhere that the renewals may not be there. So it is out of the window now. And I think it's a big positive for NMDC, and so the monopoly on the iron ore mining continues in our country, and it goes to benefit from that. So it's a clear buy.
Okay. Dharmesh, just one final question. The spate of news flows that had come in today, there was the divestment move announced, and stocks like BPCL are still trading firm despite the markets looking wobbly. It's trading up about 5.5%. Would you be a buyer in BPCL?
Yeah, just for the sake of this news flow, because the government has no choice but to go for the divestment, and BPCL sits on a large part of land assets. So the thing which has to be seen out there, whether they will be selling only the refining business or it's a en bloc sale. I mean, the assets also goes along with that. If the assets also goes along with that, then the valuation can be quite high. I mean, SOTP based valuation, it can be anywhere between 750 to 800 kind of a price which the BPCL can ask for. But if that is not the scenario, then I think 650, 660 should be the asking price for BPCL divestment. So yeah, definitely as a trade, this buy is definitely on.
Okay, Dharmesh, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.
Thank you so much.
Well, just before we get back to Sachidanan Uttekar as well as Amar Singh, we're talking about news flows that have happened. The government has announced